Okay, great. Thanks a lot, Dinshaw, for joining on this weekly session of ours. We do it every Wednesday. And we also incidentally had Samir also in one of our sessions sometime earlier this year. So again, thanks a lot. So my first question to which I really wanted to ask is that Helios as a firm since its inception has been managing kind of institutional money, and that too from very large global institutions. Maybe it is US endowment funds or some of the Gulf sovereign funds, etc. So this entire idea of starting a mutual fund which largely caters to retail investors in India, how this entire idea kind of germinated?
Okay, thank you, Rohit, first of all, for having me on your weekly show. And thank you to the listeners to take our time in this on this lovely evening to listen to me. So here's how it is, Rohit. Actually, when we actually started off with institutional money, you're right. This was way back in 2005. We started off with an offshore fund, which was India dedicated long short fund. We used to raise money from US and Europe and invest in India. So that's how we started. Then in 2010 December, actually ICICI Prudential approached us, and they told us, why don't we do a PMS on their platform as an advisory? And somehow it caught on with us. When we started doing that, we realized that the performance was excellent. Actually, we took the long leg of a long short fund and we just replicated it for the PMS as such, and did wonders. I mean, that fund, Star Alpha India Fund from ICICI Approved, which we were advising. Actually, we were managing it totally, but we were called advisors. That did phenomenally well, and in fact, so well that we decided to apply for our own license. And by December of 19, we gave up that relationship and started our own PMS. So, in somehow down the line, we also came up with an AIF, because a natural extension to a PMS is an AIF, which was again a replica of our long leg of a long short fund. Yeah. So when we did that, we realized that the performance is so good. We said, why are we just sticking ourselves only to HNIs and UHNIs? Why not to the retail public also? And actually, we took our while, and we were thinking about this for a while, but we took our time because we wanted our base to be set up in terms of the flows, regular flows of profits to come through our alternate route, so that we could even fund our mutual fund as such. So that's how I think we caught on. We applied for our license in somewhere in 21 and finally got it in August of 2023. And here we are with our first NFO, we just closed.
So great, more the merrier. In fact, incidentally, I was asking a similar question to another newbie fund house. So Y2 Capital also, has
Right.
started a fund house
Yeah.
slightly older than you, but you are asking me why am I starting a mutual fund when there are already,
You
let's
should
say,
be
40
asking
mutual fund
others.
houses in India. No. So he said that you go to US. If I in US I say I was the 44th or 50th fund house of US,
Or they'll
I
be
will be
pushing
among
me.
the
Yeah,
biggest.
yeah. Yeah, yeah. The
So
5,000
when
odd are
if
there.
all of us
Right,
so if all of
right.
us believe in
So,
the India growth story and we believe that this story is going to play out
so
for
Rohit,
many years,
let me,
maybe over decades.
yeah, that's what. Let me give you another angle to this. Okay, so there are only 4 crore unique PAN cards which are invested in mutual funds today. Okay, and if
Hmm.
you and this spread across debt and equity. Yeah, so we are purely going to be an equity house. So if you assume that there's going to be only, say, let's assume all 4 crore are in equity, there are 40
Hmm.
odd crore PAN cards issued all over the country. Okay, there are 7 odd
Hmm.
crore regular filers of income tax. So we've just scratched
Hmm.
the tip of the iceberg. And can you imagine, these 4 crores are spread across just 10 crore folios? Okay, all across. I mean, this is only
Hmm.
equity I'm talking
Yeah.
about. So that's 2.5
Hmm.
folios in front of every PAN. I mean, it's not possible, right?
Hmm.
I'm sure if you look at your folios under your PAN, there'll be some 20 odd or something in different funds. So it's
Yeah,
obvious that we just,
absolutely.
yeah, so we just there. So on an average basis, also we just about scratching the tip. And if you're telling me, I mean, I mean, I thought I would tell you our history, but I was going to come to this fact that in US there are some 4,000, 5,000 odd mutual funds as such. And frankly, I mean, ours is like a fund promoted by fund managers, so we're really enthused about it. And we are like probably 45th or something, not even 44th. So, but
Yeah,
still,
no,
there's a
that's what.
long way
So,
to go. There's a long way to go.
20 years from now, 45th fund house would suddenly sound like such a great place to be.
Thanks,
so,
thanks. Yeah,
so,
we
so
look
that's
forward to
so
that.
no, so
Yeah,
I have a slightly, kind of a different take on it, and just pardon me, if my question sounds a little
please.
awkward. So I personally worked in a fund house. I was with Vela Sun Life for almost 5 years. So I have kind of
Right,
seen this entry and exit of new fund houses quite closely. One round happened maybe just after the financial crisis, and then as late as maybe last year itself, IDFC kind of gave up its fund management business, and it was taken up by Bandhan Bank. So what is the reason that some of these fund houses, so one, I understand maybe some global banks, they are having capital pressures in their own country and they want to release capital from wherever they are not scaling up. But what is the reason in your view certain fund houses are able to scale and certain fund houses are not?
so I get a feeling that most of the guys who gave up their businesses were mainly like, if you call it a yes bank, which was sold to a white oak, or a IDFC, as you just mentioned. I think it was more
Hmm.
of a diversification for them, and there was no focus from these guys onto their business as such. So my feeling was that, and plus they were running after assets. Actually, I think you're an investor, and our feel
Hmm.
is that if we focus on our investor, in fact, the Flexi Cap, which we recently launched, we the question that we were asked by most of the distributors was, which is your next fund? And we didn't have an answer because we actually don't know which is our gonna next one gonna be. I mean, our feel is that probably we'll play upon this Flexi Cap. We'll see how the performance goes. And then probably after elections, we'll take a call. I mean, central elections I'm talking about. We'll take a call which
Yeah.
other fund to come up. So that's how it is. So if you're focused onto your investor, if you're focused onto your fund, in fact, that's what I tell every other guy who asks me that when do you book out of a mutual fund? My answer is very simple. If your manager is proactive enough, there's no need for you to book out of a mutual fund because he's already doing that on your behalf. He's churning the portfolio, and I think that's where the focus has to come in. And frankly, uh, that is how we want to play this out in this industry as such. And that's why we're going to be very focused players on equity and very limited amount of funds in our portfolio as such.
No, no, so absolutely, and this all of us know that Helios as a house, this is the only business you have. So focus to rahega usme, to there is no doubt only. And on your other point, where should investors take decisions or should they let fund managers take their decisions? I can tell you this, Dinshaw, from my personal experience in my personal portfolio also, okay, best returns
Yeah,
I've made in tax saving schemes, and that is because they get locked in
right.
for 3 years और मुझे अपना बुद्धिमानी
Yes.
यूज करने का मौका नहीं मिलता है.
Right, right. You said the
So
right thing.
investors के
To
लिए तो investors को तो just they should pick the right guy. Maybe if they're not sure, diversify it over 2 3 good fund managers with a decent track record and just fill it, shut it, forget it. SIP से better कुछ है
right,
नहीं. Market volatility anyway capture हो जाता है SIP में. And
right.
I think that's the way one should approach this. So this is great. So anyway, coming back to our favorite question, a different take on market kya lagta hai? So you just touched upon elections also. So let me break the question into two parts, okay? And we are just
Yeah,
Diwali's around the corner. The new Samvat will start. How
right.
has the year been so far when you look at markets? And small cap, mid caps have given fantastic performance, although there was some correction recently, but year as a whole, fantastic performance. How do you gauge this? And then the second part of the question is going into the new Samvat. How do you see markets playing out?
So okay, on a two. Okay, so every, I mean, 1 year basis, the markets have done phenomenally well, especially the mid cap, small cap part of the index. I mean, they're up some 20-25% odd, both the indices. But if you look at the more narrow index, which is the large cap index, which is 50, that's not up so much, right? So it's not done much. So the obvious uh, the reason for that is that the money has flown into mid cap, small caps in a very large way. And to an extent was justified also because they were probably taking a backseat till not so long back. It's only recently that they've got the real flow coming in. But our feel is that, especially in the mid cap space, which is just limited to 150 odd stocks, there's a lot of froth which has come up, I suppose, in that space. So our feel is that that's one area you need to be careful about. In the small cap space, anything beyond 250 is small caps, right? The top 100 are large caps, the next 150 are mid caps, and beyond those are small caps. But then again, can you imagine in India, small cap starts at 25,000 crores? Right? That's what the
Yeah, yeah,
base for
yeah.
small. So
Yes.
you can imagine the amount of money which has fallen into small caps also. And unfortunately, even
Hmm.
if you the money, bulk of the money, though it's flown into say most of the index stocks. I mean the Nifty 250 or something it's called. I think mid small cap index 250 stocks. But even beyond that, the problem is once that index corrects, those guys also collapse, right? So it's our feel is that that space is right now a bit on the edge. But looking at it that way, I don't think there's too much of a correction also because look at the flows, right? We're talking about 16,000 crores of SIPs on a monthly
Yep.
basis kicking in.
Absolutely. Yeah,
We're
yeah,
talking of
yeah.
another 4,000 odd crores coming in by way of NPS, EPFO, and probably unit linked insurance schemes. So you're talking about 20,000 crores on a monthly basis coming into the markets regularly. There's no headwind for that. There may be some in terms of a selling for a short period by FIIs, but beyond that, there's not much of a headwind for these guys, right? So there is sustenance, and that's a good thing. That's a good thing because actually, if you talk about the valuations of the market, on a more narrower index, which is I'm sorry, on a more broader index, which is Nifty 500, NSE 500, we still probably at par with our say 7 8 year averages. Because I'm talking about 7 8 years because I'm talking about demon post demon, and most of the flow started post demon only as such. So that's why you're looking at say
Hmm.
6 7 years of averages as such. So we're in a very good
Hmm.
space. I don't think there's anything to worry about as of now in the markets. Having said that, again, if you split the year into two parts, right? One, say before, I mean, during the state elections period, which is I think lasting up to Holi, if I'm not mistaken. I think March or so is these five states going to elections as such. That may be a place where you want to and want to probably be a bit cautious. And I'm not talking about a big correction. I'm probably talking about a time correction. But the point is that even we could have even absorbed that. Okay, any adverse news on the state election we could have absorbed. My bigger concern is the way the U.S. bonds have behaved, right? And we're talking about the longer
Hmm.
dated bonds. We're talking about the 10-year bonds, where there was
Yeah.
a sharp bear steepening of the curve. If you remember, the difference between 2 and 20, 2 and 10, sorry, year bonds was roughly around 130, 150 bips in June, which got compressed to 15 bips, which is a concerning area
Hmm.
because you're selling off the longer dated bonds. I mean, you're basically taking a call that US is going to go through a pain for a very long term period. But fortunately, that has come off now.
Yeah.
I mean, in a very short spate. And I
Hmm.
think Fed has done a fantastic job of managing that. And so that's why I said the next 5 months odd, 5 6 months odd, are a pretty trying period. So better be cautious then. And that's why we are, when you see our flexi fund, you'll see that the bulk of the weight is in large caps because we want to control the beta of our portfolio to a larger extent and not get carried away
Yeah.
by the small cap and mid cap. So, sorry, a
Mm.
long
So,
answer to a
so
very short question, but I think it was
no,
justified.
no, 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 absolutely. And a couple of themes which I kind of I'm hearing from all the great fund managers that we have, like yourself. So last week, Naren was also here on our spaces, and exactly the same thing he mentioned that mid caps, small caps look a little frothy. And second is the way domestic investors are now supporting the market. I go back to my experience in the mutual fund on the mutual fund management side. उस समय पे बोलते थे कि एफआईआई छीकेगा तो इंडिया को बुखार हो जाएगा. अभी कितना लास्ट टू लास्ट ईयर वी सॉ सो मच सेलिंग. अभी करेंटली ऑल्सो देयर इज सो मच सेलिंग हैपनिंग. कुछ भी नहीं, नथिंग. मार्केट जहां है वहां पे है, मे बी 500,000 पॉइंट हियर और देयर. बट ऐसा नहीं है कि मार्केट विल करेक्ट बाय 20-30%. I remember 2013 taper tantrum. and market felt like there was no tomorrow. And abhi to kuch bhi nahi hai.
Right,
Fed, you are rightly saying Fed, your treasury went up to 5%, came down to
right,
4.5%. Bill
right,
Ackman placed a short, again covered the short. सब हो गया, market जहाँ पे था वहीं पे
right,
है.
right.
So
But actually, you're right, and frankly, I mean, as you rightly said, that it's mainly the domestics which are absorbing all this. Sorry, I interrupted you. Yeah,
yeah. Yeah, yes. No, no. So absolutely 100% agree with what you mentioned, and kind of there's a commonality in what we are hearing all across. So great. So this is the first part of the question. The second part of the question is, how do you see markets behaving? There is this big event of general election, state elections. Again, most of the people are saying, a little bit here or there, market will absorb it. But obviously, the big event, we recently saw Jeffries put out a report that if the current government is not re-elected, we can see as sharp as a 25% correction in markets. So, how, as a fund manager, you kind of manage this big event which is coming up, and in general, how do you see markets behaving going into the new year?
so as I said, I don't think center is going to be an issue. I mean, if you've seen most of the polls that have been carried out for the central elections, I think the existing
Hmm,
government will continue. Our feel is that. So we're gonna play with that. That's the obviously the
hmm,
base case scenario that you're gonna go with. Because anything
hmm,
besides that, I would tend to agree with Jeffries. But I think that also correction will be pretty sharp. It will be like what happened in 2008 when the government changed and there was sorry 2004 when the government changed and there was a sharp correction down initially and then markets recovered after that and stuff like that. So maybe again the bigger issue will be the reforms which have been kicked in, right? I don't think anybody can
hmm,
renege on those reforms. Even if there's a new government which comes into the center, I don't think they can go back on those reforms. Our feel is that probably the whole India story may get pushed by a year, but nothing beyond that because I think we're on a very strong footing here and nothing can shake us from this. Our place in the world is set. We're going to be the third largest economy very shortly. I mean, our call is in the next probably 4 or 5 years, we'll be the third largest economy as such, displacing Germany and Japan and becoming the third economy to pass $5 trillion in the world. So there's no way you can push us back. Probably it'll get pushed by a year and probably we won't be the third, we may be the fourth economy to pass 5 trillion, but we'll be the third one pretty shortly. So we play with that kind of a scenario and I think more or less we'll be safe if we do that.
okay. And in general, how do you see markets behaving?
So markets, as I said, there'll be a knee jerk,
No, sorry,
definitely.
sorry.
It's
Then
a,
so
there's a
I'll just maybe juxtapose another question into this, which is while you were doing, maybe launch of your fund house, I'm sure you would have traveled across India and met, all kinds of people, distributors, investors, and maybe corporates also.
right.
So generally, how do you see markets behaving, but with a little bit sprinkling of what are the sectors do you think will kind of outperform versus some of the others who might not perform that well?
So here's how it is, Rohit. Actually, if you see how I mean, when I said that India's place in the world is set, and obviously it will be the third largest economy very shortly. Whenever you see these kind of moves in such huge economies, I mean, I'm talking about say probably a US in the mid 70s to mid 80s, or say China from early 2000s till mid 2010s as such. Uh, if you see these moves, two sectors stand out, right? And the one obvious one is finance. I mean, be it NBFCs or banks or whatever, yeah, intermediaries and stuff like that. So that's one sector which stands out. The second one, which has to stand out for economies to move, because capex can take you to an extent. I mean, manufacturing can push you to an extent, but it has to be consumption which has to kick in a big way for economies to move like that, right? So these two sectors are a given, and finance actually gets a double whammy because finance is not only for funding the consumption. That's why these NBFCs and intermediaries kick in, or fintechs kick in, and consumer-facing banks kick in. And you already seen that in a very big way. It's consumer financing which is picking up, in the sector in a big way. And secondly, these banks are also needed. The big banks are needed to fund the capex, which is needed to fund consumption. Okay, coming to consumption loan, staples and FMCG are not that benefited, because they may benefit to an extent by way of premiumization, but beyond that, I won't be brushing my teeth four times a day just because I'm earning more, right? Or I won't be taking a bath like 5 times a day just because I'm earning
Maybe
more. So
maybe
I'll
you'll buy the more expensive version of
expensive
Colgate,
soap,
which
yeah.
keeps on coming up with new versions.
That's what I said. So premiumization may kick in, but it has to be
Yeah.
discretionary, which has to pick up. So that's why, as your purse becomes bigger in terms of the earnings, your regular earnings take a smaller piece of your purse, and the discretionary parts keep getting getting bigger, right? So that's where we are very keen on. So these two are the sectors that you need to concentrate on. Plus, I think in India, there's other stories building up, like probably you say infra plays, because you're talking about capex is kicking in. Don't forget that we already private sector capex, the three cycles which have been deferred, right? And now if you listen to all these calls of managements and stuff like that at the analyst calls, it's obvious that they're also talking about capex push coming in and stuff like that. Till now, it's been only the government capex which has kicked in, and that's what's supporting the economy. But I think the private sector has to kick in a big way. So that's one area you want to look at. And the fourth one is defense, not only for domestic, I would say, indigenization stories. There, I think there's a cyclical play there. That's why we're not keen on those. Like, for instance, why I call it cyclical is that if you give a five somebody in order to, say, Musgao Docks, the fellow is booked for the next 5 years, right? Or if you give, say, seven Tejases to a Hindustan Aeronautics, he's booked for the next 4 years. So that's not what we want to play with. We want to play with stories which are more for outsourcing, because our feel is that because of what happened in Ukraine and Russia, or what's happened with Israel and recently Israel and Gaza, and obviously China and Taiwan muscle reflexing is going on for a while now, most of the big guys are upping their spends in defense. And that can only sustain if there's an outsourcing play working out. So our feel is that India will ultimately become an outsourcing play for most of the big economies as such. And you need to get into those areas where, like, electronic component players and stuff like that, which can supply. So that's another area which will look very good for us. Tech, unfortunately, by the way, so globally also, if you see the rich guys, if you look at the Forbes list of, say, top 100, they come mainly from three sectors: bank, finance, consumption, and tech. But unfortunately, tech in India is not platforms and products, it's more of services. So that, I believe, will take a backseat till things are not clear in the US. Because discretionary spends have to kick in terms of IT spends in the US before we start looking at the domestic IT guys. So that will take a backseat. Outsourcing will take a backseat for a while.
Okay. So more disposed towards cyclicals is what I am hearing out of what you just said. Okay. So now the next question is this very interesting term you guys have coined. What is this elimination investing? Selection bias to Sunata elimination investing. I haven't heard.
Okay, so here's how it is. This is how it works. If I tell you that a person steals, right? You know he's a bad guy, right? But if I tell you he doesn't steal, will you assume that he's a good guy? You won't, because maybe for all you know he murders people, right? He doesn't steal, but he murders. So that's what I'm saying. So the bias is, you know that something is bad, you will not buy it. So if I tell you a promoter is bad, he never thinks about minority shareholders, you reject that stock. But you've rejected that
Hmm.
stock on conviction that the promoter, till the time the promoter changes, I will not be looking at that stock. That's called elimination. So what we
Hmm.
did was, Rohit, we went back to the basically the index. Now, invariably, one third of the index does phenomenally well. Okay, we're talking about NSE 500, yeah, and phenomenally well.
Hmm.
I mean, if you look at the 150th best performing stock over the last 18 years, that
Hmm.
stock has given you a 10x return as compared to the index. That's how well those 150th
Hmm.
stock has done. Okay, so you can imagine what the ones
Hmm.
beyond that have done. But
Yeah.
unfortunately, the bottom 200 did phenomenally badly, right? So if you look at the 300 best performing stock in the index, I think that stock was down
Hmm.
50% or something over the last 18 years when the index was up some 1,000 odd percent. Yeah, that's how badly they do.
Hmm.
So we took the
Hmm.
bottom 200 and we said, what's wrong with these guys? So we wanted to find out what's bad because you know what is bad and you don't know what is good. Actually, by the way, one Japanese investor, because we keep pitching to offshore investors. So when I was explaining this theory to our one of the Japanese investors, he
Hmm.
told me a very beautiful thing. He said in Japan, we always have believed that a person is good only if there's nothing bad in him. That was lovely. I said, yeah, this is what I'm trying to tell you, that you don't know what is good, but you know what is bad, right? So we took these
Yeah.
bottom 200 stocks and we said, what is
Hmm.
bad with these guys? So we came up with quite a few things like bad themes, bad dynamics of the industry, disruption in the industry, probably
Hmm.
bad management, bad financials, bad corporate governance, bad, say, medium term triggers. And the last
Hmm.
one was valuations. So we told our
Hmm.
analysts that, so we came up with 8 factors, by the way. And we told our analysts that every time you look at an idea, you have to clear it step by step. Start with the theme. Once you clear the theme, you come to the dynamics and go on till the down. Last factor has to be valuations. You cannot look at valuations
Hmm.
till the time you clear the first 7 factors. Now, and that is mainly because we don't want our analysts getting confused. I don't want my analysts coming and telling me that, look, the valuations are cheap, but the management is bad. Because the reason is that the management is bad, that's why the valuations are cheap. That's why we didn't want him getting confused. So we said the valuation is the last thing you look at, and the rest all is. So on this rejection parameter, we start eliminating stocks. That's why we call it elimination investing. Now, when we started off in 2005, we put the NSE 500 through the sieve of eliminations. After the eight
Hmm.
factors, there were only around 80 or 90 stocks which were left in our list, right? So that's how
Hmm.
beautiful this thing is. And you know that these 80, 90 stocks, we don't call them good, by the way. We call them not bad because we know that there's nothing obviously bad in them. There may be something bad coming up later. And obviously, there are things
Hmm.
which don't turn out good. But yeah, but you know that this is where your alpha generation will most probably lie. So that's why we believe that elimination investing gives us a line of sight to alpha. So that's how we do this
Yeah,
thing.
and maybe
Very
in
unique.
simpler terms, I can say I can maybe kind of if it's a right simile or not, but it's almost like saying that ensure that there are no leakages in your bucket. So that is equally important. ऊपर से पानी कितना भी डालोगे अगर लीकेज है तो वो खाली हो जाएगा लास्ट में.
वो
So
खाली हो
in some
जाएगा
sense, you
राइट
are saying
राइट
that yeah, remove all the potential leakages from the portfolio first before you decide where to invest.
राइट और probably if your bucket is full of fish, try to make sure that the bad fish are out. So
Yeah,
yeah,
absolutely, absolutely.
right, right,
So great, Dinshaw. We are at time. One question I really wanted to ask you, which I've kept for the last. So you've been in the market
right.
for a very, very long time, and you've seen everything that is there to see. Obviously, market will keep on teaching us. No one predicted COVID, and especially
Yep,
what
yep,
happened to
yep.
markets after that. So not from a professional life, which is managing billions of dollars of money in your personal investing in your personal portfolios or in your personal finances that you manage, what is that one lesson that you would like to share with all of us here on the call which has helped you manage your personal finances better? Because what I know again from my experience that people who work in finance actually are very bad in managing personal finances, but in your personal portfolio, what is that one theme, one idea, one lesson, one mistake that you would want to share with all of us?
One thing that we've realized, Rohit, is that I mean, in my lifetime, never be carried away by say cheap valuations, right? Because and
Hmm.
basically the cheap valuations. So see, one thing is very clear: you need to protect yourself from real damage, which can be because the stock goes to zero, right? So it's like total destruction of value. You need to protect yourself from that,
Hmm.
and the only way you can do that is to make sure that the stocks that you take, one, it
Hmm.
should be in a very capex heavy industry, right? And two,
Hmm.
the capex is, even if there is a capex heavy industry, gestation period should be big. And three, even if the gestation period is big, make sure that the stock earns enough, or the company earns enough capex to take care of its capex cycle and doesn't get too stuck in a debt burden. I mean, the debt really kills companies, because when the cycles turn,
Hmm.
this debt becomes a millstone around your
And that
neck
is
and
true
sinks
for
the stock.
why only companies. It's it's true for your also. Again, if you personally take too much of debt, you obviously are going to get stuck very badly. You won't be able to take advantage of good opportunities if they come, etc. So what is true for companies is true for humans also.
Very true. Very true. But one more thing, one more thing that I felt I should share is that investing is a full-time job. You can't, I mean, if you're investing directly in the stock markets, it has to be a full-time job. You cannot buy a stock and you say that, okay, I won't look at this because I like this stock and it looks lovely for the next 15 years. Doesn't work. It has to be a full-time job. Every short term has to add up to a long term rather than holding a stock for the long term. So it's better to leave it to professional to manage money rather than try to do it yourself when you have some other job to do. It's not a hobby. It cannot be an hobby. Okay, investing cannot be an hobby. It has to be a full-time job. So that's how it
No,
is.
no,
The better would be to
absolutely.
leave it to
And
professionals.
I tell this to my friends who are in medical profession, just like all information about all diseases are available on YouTube. But even if I get a little fever, I quickly run to my closest doctor. वह मैं खुद से
Close
Calpol
it.
भी नहीं लेता हूँ. So how is it any different for you? Why are you trying to manage stocks portfolio? You will make much more money if you try to focus on your core profession. So expertise, and
True,
especially
true,
some of
true.
these things, health, education, finances, just because it is available on YouTube, I am not going to not send my kid to a school. So
True,
उसमें तो
true, very
एक्सपर्ट
true.
के हाथ में छोड़ ही देना चाहिए.
Right, right.
Yeah.
Great.
Great. So, Dinshaw, it was very, very nice talking to you, and we will keep on catching up more frequently. We are eagerly awaiting your fund. I think NFO closed yesterday, so we are eagerly awaiting you allot the units and open it up for taking fresh money. I think it will be locked for a few days, is what I understand. And then we
Yeah,
will grill
yeah,
you
yeah.
next time कि बात तो आप बड़ी बड़ी करते हो performance क्यों नहीं आया. So next time we'll try that also.
होपफुली वो उसकी मौका नहीं देंगे हम आपको कि
Chalo, fingers
अच्छा ही
crossed.
होगा शायद
And
परफॉर्मेंस हमारा. So yeah,
yeah,
fingers
no, no,
crossed, fingers crossed.
absolutely. So with right process. So again, Dinshaw, this is why my little learning from my little experience. Obviously, आपके जितना नहीं है. Processes अगर right हो ना, sooner or later performance आ जाता है.
हाँ, right, right,
तो
right. That
वो
is
और
very true. That is very true.
हाँ, और वो उतना अल्ट्रा शॉर्ट टर्म इन्वेस्टर्स आजकल थोड़ा इन्वेस्टर्स भी समझने लग गए हैं कि वो 6 महीना 1 साल ये सब परफॉर्मेंस मत देखो. 3 years is minimum what you should
Right.
look at.
What you should look at.
So
Yeah, yeah, yeah. Give
great.
enough time for the manager to adapt. So that,
Yes,
yeah,
yes,
great.
yes.
Thank you.
Great. Thanks so
Thank you,
much,
Rohit.
Dinshaw.
It was a
So
pleasure.
and wish you and everyone else on the call a very very happy Diwali. Have a safe Diwali and enjoy with your
Thank you.
family. Thank you.
And we wish you and the listeners too a very happy Diwali and a very prosperous new year, and hope their future years also very prosperous. Thank you once again, Rohit. Take care. All the best.
Thank you.
Thank you.
Bye. Bye.
Bye.
Thank you, sir.
Bye. Yeah.